crash is over, the boom hasn't followed, we're in the middle. Values are rising slowly. February ticked up 0.3%. Over half the suburbs are climbing. Banks say we're heading for 5 to 9% growth this year, but what do expert property investors think? The popular Dave Whitburn returns, he's next.
Financial freedom faster. Financial freedom faster.
If you like making money rather than watching everyone else do it, hit that subscribe button because the numbers don't lie. More investors are getting the New Zealand housing and real estate intel in 2025 from this show than any other YouTube channel. Dave Whitburn started with putting a minor dwelling on the back of his section and recently finished a 74 property development in West Auckland. Dave, listings are high, buyers have options. What are your thoughts?
It's a fascinating market at the moment, Andrew, and it's really exciting to see some of the fear and greed. These two human emotions fundamentally drive real estate there. In your preamble, you mentioned a 5 to 9% growth rate that some bank economists have got. I find that particularly interesting, and whilst I highly respect them and probably borrow from them, their bags there, I think that's really optimistic. 5 to 9% capital growth rate projections over the course of 2025, I think is a little bit ludicrous there. We don't have good drivers. We've got the highest rate of loan impairments at 0.7% than we've seen since the GFC. We've got $2.4 billion of impaired loans. It's loans not paid within 90 days. Unemployment's still persistently high at just over 5%. Migration's weak, and we have an inventory build-up where we have more listings each month than we have selling them, and we still haven't cleared the past inventory.
So is this a story of different regional areas having some strength and some weakness?
Absolutely, Andrew. There are some winners and some losers, as there always are. There have been some particularly challenging stories, concerning ones about the Wellington property market. Some of the rents are pretty huge. Former Capital Property Investors Association president, I think it was, Adam Coburn, is a leading real estate agent there, talk about slashing hundreds of dollars a week off his rental after having a couple of months vacancy. Stories like that are becoming too common, where rents are dropping, landlords dropping their rents 20% just to retain tenants in our nation's capital. A little bit frightening there as well. Other areas have seen quite a bit of strength as well. The areas like the Queenstown Lakes District Council, they're going relatively strongly still.
Yeah. And there's an infrastructure constraint, there's construction constraint. Given all of that, what are your predictions for the rest of 2025 and for house prices?
I'm probably a bit more conservative than the banks and don't see anything like 5 to 9%. I see capital growth rates being very, very small, somewhere in the 0 to 3% rate is more likely to be achieved. This will not be uniform across regions and indeed sub-regions because New Zealand's a large enough economy and there are different balances in terms of supply and demand. But that's the generalization. There's 0 to 3% growth for the rest of this calendar year.
We don't buy the average property. So what's your take on making the best of this situation?
Absolutely. With mortgagehq, what I like about you is that you don't teach people to be average. How many people get out of bed wanting to have an average day and wanting to be average? That's so boring being average. You want to be good. So instead of getting an average deal as about 4% gross yield and it has lots of cash flow to subsidize to it with capital gain all sapped out by somebody else there, you teach people there to buy properties astutely with a good cash flow profile there. So there are lots of opportunities. I love the fact that the market's in a downturn. There are some mega deals that we can buy all throughout the country as well because people are scared and the property cycle does drive a little bit on emotion, and these are the human emotions with fear and greed in it. So you can take advantage of these by being able to offer the best price on the day. Never encourage people to take advantage of anyone else, but on something that's advertised, listed on a market through agents, or you can just win on that day. Buy those great deals that have good cash flow profiles, big land around them, because there aren't too many people looking now. There's a lot of fear in this market that, the market might go down more. Some say that, I've heard it in the radio that could the market fall 20%. It's even worse on social media and some commentators there. So it's some really fantastic buying opportunities right now. And I think that we can take advantage of these opportunities this year and next year. So we might as well just keep going, get the financial approvals, get in the position to buy these great deals, particularly ones with a bit of ability to add value to them. And might cover that in another topic as well in terms of what can we do with these new granny flat rules.
A reminder, this is the fastest growing investment channel in New Zealand, and it's not by accident. It's because the people who hit subscribe here, they don't wait, they win. You want to keep thinking about it? That's fine. Just don't cry when someone else closes the deal you missed. Of course, affordability is the political football.
Yes.
DTI restrictions are making a bit of a play. What is the long-term solution on how to make property more affordable?
Absolutely. That does come down to the drivers in the market there. So if we have more housing there, we can put on more supply on doing this. And certainly there's been a lot of supply. In fact, in some areas, I'd argue it's an oversupply. The DTIs are one of the biggest constraints. They actually constrain homeowners quite a bit. The reason is that you have to actually have some pretty decent household incomes to buy the median house in areas. And often those homeowners aren't buying the median house, they're buying a cheaper house. It's all they can afford. But it's made it harder, and that's actually slowed the rates of capital growth. So I believe it's given a structural shift in the economy, these debt-to-income ratios on it. And I think it's probably, in hindsight, a good thing, as much as it pains me to say. But particularly in Auckland, Tauranga, Queenstown Lakes, have been some real challenges on affordability. And because they're great places to live, work, and go about life, I think we'll continue to see them being a little bit less affordable than others, though.
And with mortgage rates, the monetary policy, what are your predictions there for the next 6 months?
Interest rates will go down. How much? Not 100% sure, but I love crystal ball gazing. I think that if you're getting some sharp rates with a 4 point something, and so that's something you need to do. I just don't like having all my debt coming up for once. It's having a bit of an interest rate averaging strategy. In this case, it's the dollar cost averaging strategy for debt management. That can be something that's prudent to do. I'm not a financial advisor. People can go and seek their own advice from that, but I think that they're more like to see some minor drops throughout the rest of the year. So don't be in a hurry to lock in those 4 and 5 year rates and things like that either. They're a little bit decoupled from the OCR dropping, but there are some uncertain times. The economy isn't going as well as we'd like. So I think you can have a bit of fun with the interest rates and expect that that you have a lower cost of borrowing going forward over the next 12 months.
Yeah, and migration, we are seeing that start to pick up, but a lot of students flooding in, and I'm guessing most of them ending up in Auckland.
Absolutely. We had a really good chat about, hey, what's the composition of these migration statistics? Obviously, not too many people go into Stats NZ's website to do it, but if we did do that, we'd actually see a number of the migrants build up, and seeing a lot of them in students and work visas. These are typically temporary accommodation. There aren't that many students that buy houses to be that's not a realistic thing. They will occupy them, but are they going to be in big language schools in Queen Street, K Road and the likes? Quite often, yes. That's helpful for the landlords in the rental market for properties over there. Perhaps not so helpful in thinking that that'll really surge up house prices. Migration has historically been the most closely correlated property driver towards house price growth. Just thinking that it's not terribly helpful, because if we stripped out those student visas and the work visas, we actually don't have that many migrants there. So the rate of net migration is actually only very small.
Yeah, and Australia is doing a lot to encourage migration, especially the highly skilled migration, and we're losing that battle.
We're losing that battle, even though when you take into account their higher taxes and contributions and levies, and the fact there are plenty of Australians there as well, and some of them are plain annoying. It's just something we've got to be a little bit conscious of, that we have a number of Kiwis that have done and come back. I had a guy 2 doors up the road from me, go to Australia, nice for a couple of years. They're back now because they weren't actually saving what they want, and it's not New Zealand.
So you got a lot of contacts in the construction sector, a lot of tradie mates.
Yes.
What's going on at the level of repairs, and then in the building side of things?
They're doing it tough. The infrastructure projects are still going ahead at the big end of town, but a lot of these renovation projects, the smaller build ones, they're doing it really tough at the moment. Very competitive. Some people are doing jobs just to keep their lads busy. It's a very, very tough time there, because we've had so much supply that came on board with the COVID inflated policies when we were debasing the economy, giving out lots of money, borrowing more, and sending it through. That was great for a short time, but we did it for too long, and it's caused some real challenges. And it would have been great to even that out, smooth out the flow. Didn't happen that way, so we're reeling, and that's why we're seeing investors having longer vacancy periods, offering incentives. These are all symptoms of supply issues, and that's why I believe that there's a mild oversupply in many urban markets at the moment.
And how does this play out politically? If house price growth is slower, then politically, especially if there's a change in government, not maybe next time around, but the time after, there'll be less incentive for that. No, the Labour side of government to introduce things like shorter bright line periods and capital gains tax.
Yes, however, it's tribal and it's an ideology to do that. So there has to be something that creates a difference, because otherwise the National Labour Party is actually about 93% the same when you put their policies together. So you have to make a massive deal out of the 7% or so that's different. So to do that, you have to focus on these very small things to do it. I mean, as much as National have criticised Labour about their spending, Nicola Willis is going to be on record as the highest spending treasurer in New Zealand history. So the criticisms there that she led, unfortunately, will be washed through. At some stage, we have to realise that we don't really seem to want any massive change in that, and we just want to battle around the middle. And it's always been and always will be the battle for the middle. And we will see some policies that are only minor in their impact to do it. Things like the interest deductibility, if that gets banned, that'll frustrate a lot of people, particularly those that had what were new builds that are obviously not categorised as new builds anymore. That's something that we'll see again in the future, and that's where the political football is.
And what's going on with Kaingaora? There's a big sell-off coming.
Exactly, it's exciting. There's a big sell-off in Kaingaora. Kaingaora has over 70,000 houses across the country. That is absolutely massive. However, they previously paid a dividend to the government. Now they're actually costing a couple of billion a year. They've had the Bill English report to do it. And when you've got a massive portfolio like that, you probably should be able to make some kind of return there. Of course, I believe in my worldview that we should have a roof over every Kiwi's head. We've got to look after our most vulnerable. That's part of a mark of a decent civilised society, in my opinion. So I think it's great to do it, but having these properties in very high value suburbs and top 20 suburbs in the entire country, maybe that's not a prudent use of capital. Maybe that could be sold and maybe get 6 families housed instead of the 1. So that's where I believe that this is a good move. It's good for the portfolio to do it, and they can perhaps ease up on the development. And I still believe that these community housing providers are amazing. They run off the sniff of an oily rag, and they do some absolutely wonderful things, and we need to support them as they deliver so well, and they're so much more efficient than Kaingaora have been. There are some great people in Kaingaora, some really, really hardworking, diligent staff. It's just that it just blew up in size a little bit too far, too fast, and some of the purchases perhaps weren't quite as commercial as they should have been.
But there has been a big swing towards infrastructure investment and
Yes.
the long-term side of things. So if you're an investor looking across the country, what infrastructure projects should be looking at and saying, maybe I can follow along where that money's going?
It's a great question, Andrew, because that goes back to what I call the pie factors. Because if we have these 3 things, the population growth for the P, the infrastructure for the I, and then the employment for the E, if we've got at least 2 of those pie factors going, we're going to see some growth. We're going to see growth in rents. We're going to see growth in house prices. We've got a few things that have been acknowledged. We've got the Auckland to Whangarei, the 4-laning of the State Highway 1. That's exciting. Fixing up the Bunduran Hills that have been getting ruined on numerous occasions. We've got great projects in Auckland like the City Rolling that's really going to help out Auckland's inner western suburbs, and of course West Auckland as well. No more train driver getting out at Newmarket and walking to the other end of the train to the engine to have that Mickey Mouse situation. This is going to shave much time off the trip, more stations up there, more relevance there. We've got the Central Interceptor project as well to really help out with the deal with our wastewater, not have the pollution in the beaches. Seeing some good changes finally from Tauranga as well. Lots of land being rezoned there, and make sure that you're checking in with council. And some of the smaller councils, they're nice enough where you can just book in a meeting with your chief planning officer and have a chat about what's going on. There is some great projects, the relocation of Whangarei Airport and things like that will just provide some other value drivers. So there are some pretty exciting projects on various levels. I know that we've got listeners throughout the country and indeed the world as part of New Zealand's largest property podcast. This is all about making sure that you're figuring out what's the best strategy for you. How can you help you and your family's financial future out by making some decisions today? They might have a little bit of additional risk, which will be okay for some people to do it, but that risk gets alleviated if you're thinking about those pie factors.
A reminder, smart investors don't need pep talks, they act fast. That's why they're here, and that's why this channel is blowing past the competition. You're still sitting around waiting for the perfect time? Cool. Just don't whine when someone else buys it first.
Do two more.
A reminder, they beat you here. Your competition, they subscribed, they're ahead. They're locking in moves while you're still staring at the screen like it's a mirror. Hit the button or stay behind, up to you.